Hello trader, welcome back to this live session for Tuesday, second day of the trading week, and looking at currently in the market for this NY session coming up, NY opening, and we are looking forward to enter some trade. Okay, so we are on I would say that the best week for trading, because you see the market is start to move and coming up FOMC. So in this session, like we do every day, we'll be focusing on opening position, and also we will be focusing on learning part of trading. So this is an exclusive live session from Forex Trading Wizard Academy. If you guys are new to the channel, make sure you like this stream and also subscribe to the channel if you haven't done yet, and also just write something if you want to assist me on the live chat if you can hear me. Thank you. So looking at, first of all, this is we are looking at gold, and also if you guys looked at yesterday's live session, discuss about the euro dollar, and the market in fact reacted to that level that we discussed. Now currently the market on euro dollar rejecting from that level that we looked at. Now in this session we are looking at gold, and also we'll be looking at trending pairs as well. Dollar yen, especially I look at dollar yen and euro dollar. We see significant trend on AUD USD because there was a manipulation earlier here in this instrument here. There was a stronger bounce from that level, and if you look at that market also could give us an entry because it's on a bullish impulse here, and if the market drop to that key support level, we will be looking at a potential entry in that area. So dollar yen, AUD USD, euro dollar, and British pound US dollar. British pound US dollar also have a very strong volatility at the moment. If you look at GBPUSD here, that there was a break below, and with euro dollar, okay, so all the USD pairs, that because of the earlier news that we have seen, there was a manipulation here, and that has given volatility again that you can see on dollar yen as well. So if we look at gold in the same way, as they all react in the same news. So looking at here, so we'll keep on watch list. I would like to keep gold and dollar yen. This is the daily price action on dollar yen. Daily support, where if the market drop back to that support, we will be able to see an entry in this market. So we'll leave dollar yen here, and also we will be looking at here on gold for an entry. Are you looking at anything else other than gold, or you are just looking at gold like we are doing here? So daily chart that you can see on gold, if you look at the daily market structure. Now, daily price action is really important to look at, as looking at the weekly and daily. If you look at the gold support level here, right? So the previous week, it has comparatively narrow volatility here, right? And this week, because when you look at the weekly, we can see the levels and support or resistance very clearly. So this week that we can see from this support level, this is the weekly support, and from this weekly support there is an initial bounce back to the upside here that you can see, which is a significant breakout. Now the market rejected from that weekly support. If you look at the monthly as well, the same way, the monthly support as well, and daily, we can see from the daily perspective, here is the daily market structure, where there is a long week, and also long week, quite a few long week candlestick pattern that you can see on gold. And this is a very interesting price action here at the moment, because the market from the daily has managed to break all these daily low here, if you look at. And because the market has broken all this low, if you look at the it crossed this low and also tested the 10 EMA earlier and bounce off that level. So that might take this market back to the upside and potentially to retest that weekly high. Okay, so looking at the weekly price action, and this is the weekly market where the price has tested this weekly support, and now going to the daily. So you see that there is a daily drop, and then the market started to bounce off that daily low. So if the market come for another retest here, that might be an entry to the upside. Okay, so there is a 4 hour, this red candle was a bearish and I had a trade here, and then the market, what you saw, there was a bounce back to the upside. So this bullish engulfer is potentially a reversal here. Okay, so if you look at, this is potentially a reversal. Do you think so? And it may directly not go back to that resistance. Instead, you could see the market to test and then to react back again to the upside. And that being said, here, now I'm looking at the 5 minutes here. So because lower time frame can give you a different picture, that's why looking at multiple time frame will be always helpful. So looking at also the 1 minute. Now this is a different picture, pretty messy consolidation here in that area. So looking at now combining all those time frame, sometimes it becomes very complex if you see all those time frame, but at the end it's all about the multiple time frame. That's where you start to see the clear picture. So this is if you look at this is 1 hour support. Now this 1 hour bullish candle is really important, guys. This is what I was trying to find out, that what level is crucial to see the market to break before it eventually move again, because that's where you start to see that clear direction in the market. So going to the 1 hour again, and this is the 1 hour bullish engulfer. So why this 1 hour candle is so important is because this price action had an ATR, and this is very important, ATR especially. So if you look at this is ATR, you can see I have indicator. If you are not sure about the ATR, you can write in the live chat, we can discuss more about that. So this 1 hour ATR here is 114 pip. So with this 114 pip, and this candle has a volatility of 217 pip, so it's nearly to 2 ATR, not exactly 2 ATR, so near to 2 ATR. So what's the advantage or the benefit of looking at ATR? Okay, so especially if you see that a bigger candlestick pattern with such a big ATR, from this support, if you look at that 2 ATR candle has formed, right? It's a bullish candlestick pattern. If the market retests that level, there is a potential for another bounce back again. Why? Because from that level, the buyers in the past were interested to buy. Okay, so it's all about the supply and demand, at what level the buyers are interested to buy and what level the buyers are not interested to buy. So now it may drop that far or may not, but one thing that we have seen, there is a double bottom here. It was a false breakdown, the market bounced off that level, and there is a double bottom and there is a breakout. So because there is a double bottom and breakout, it was a complete false breakdown that you can see. Now breaking this high here can be a move back again to this resistance line, because above this high, if you look at above this high, right, so above 4218 or 19, right, so you can do 4220. So this is a pure fair value gap. Okay, so this is a fair value gap, and we will be discussing also in depth on that. Okay, so ATR, it's average true range, the name, but it's the volatility of a particular period. And ATR gives you, now if you want to trade like an institutional trader, then ATR is very important to look at. because institutional traders or institutional volume comes with ATR. And technically ATR means that, so let's say you saw one candle. If I break down what is ATR, normally indicator considers 14 period. So if you look at one candlestick pattern, any time frame has 100 pip move, okay, high to low, and the other candlestick pattern moved 80 pip, the other candlestick pattern maybe moved 50 pip, the other candlestick pattern moved 120 pip. So if you take like this 14 candlestick pattern, and out of this 14 candlestick pattern, then average them. So if you take or add all of that together and then divide by 14, right? So let's say 180, 50, 120, add up all of them and divide by 14, right? So once you divide by 14, you find a value here, right? It's not any of that new average volatility. So it can be, as an example here, it's 90 pip. Okay, so this 90 pip is 1 ATR for this last 14 period. This is 90 pip. Now with that 90 pip ATR, now if you look at one candle, last candle is, let's say, 180 pip, one candlestick pattern. So how many ATR there then? If one ATR is 90, it's 2 ATR. That's the simplest way to know. So you can find this value here on the indicator, right? So if you see that, so indicator will give you not this, like at this candle, what is the average volatility considering the last 14 period. So therefore 2 ATR, once you see that a candle is 2 ATR, means that it gone almost double than average volatility. So if the market moves on a single period, or let's say if you consider 4 hour, 1 hour, whatever time frame you're looking at, move that much, there is something happened that you need to consider in that move. Okay, so it might be a false breakout, or it might be a breakout that will give you the ATR. So now bringing that into this current entry or the analysis that we are doing here, let's look at the day 1 hour chart again. Okay, so here is the 1 hour, and this 1 hour, it's a pretty strong bullish engulfer, and it has nearly to 2 ATR move, not fully. Therefore, because it's a key support level now, that means the buyers may be interested to buy off that level. Okay, it's an important support. And this is what you want, like the market is showing up to be strongly bullish, so coming to that level or below that level is where you can look at, or you can look at an entry in this market. Okay, so here is the move that you can see on the lower time frame, expecting the market to potentially retest and then revert again back in this area. Welcome back to this live session. I hope that you guys enjoying the live session. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing everyday's analysis that I'm posting in the channel. Okay, so 15 minutes price action here as well, that you can see the market slowly. Now because there is a very stronger momentum in this move, right? So if you look at, it's a big momentum, and there is a stronger momentum. That means this candlestick pattern may even not break below, instead could bounce back off. We wouldn't consider it yet any move until we see that really a false breakdown before it reverse to the in the direction of the trend. Welcome. Now so that we see the market slowly breaking this support, and once the price managed to break this support, and that's where we want to look at bullish entry, because it's creating that upside momentum from this support level here. That's a pretty big bullish move, and you want to see the price has been able to break that low in that area. Good evening. Thanks for joining here, and we are looking at possible entry in this market. Now this is a structure that might break back to the upside. Okay, so if you look at especially when we look at the market is in a trend, so this is where there is a stronger breakout followed by two semicircular structure here, right? And these two semicircular structure is representing potential further bounce back to the upside in this market. So that's what I'm looking at here for a breakout, for a breakdown. And once you see the market had a breakdown here, looking at that entry opportunity, looking at that the market to test that low and then potentially bounce off that level. So when we are looking at the multiple time frame, right, 30 minutes and the 1 hour because multiple time frame is where there is a high probability trade setup. And 1 hour price action that you can see, this is one single breakout and the price is testing that support. The current level that I will be looking at 4201. That's an important support because 4201 is where there is a initial breakout that we have seen from this support level. And with this series of higher low, okay, from here, series of higher low, that's a sign of bullish confluence in this market. And if the market breaks that low, we are looking at going up again from this zone. So breaking below gonna be, this is high confluence for buyers. And looking at, because there is NY session coming up, how long the NY session? Little far. Now I use an app to find out all the market hours. So New York is 6:43 a.m. It's almost nearly to 1 hour 15 minutes. So the volume might start to come around 15 minutes prior to the NY open, and then it's gonna break out. So before that time period, we might see that I think consolidation. But if before the opening, once the market managed to break this series of higher low, that's where potential entry. Because if we draw this trend line here, what do you see? That with this trend line, let's draw this trend line here, and there's an angle in this trend line, right? So that means it is maintaining a series of higher low. And because it is maintaining that series of higher low, breaking from that series of higher low is a liquidity zone. That means the market has dropped to new demand area. So we might not see the market to break here because it's a very, if you look at here, this is 1 minute price action. There was a stronger bullish price action has formed in that area. And with this stronger bullish price action formation, any break below to this break of this series of higher low can give an entry to the upside. So that's what primarily we are looking at. and we can mark that level as possible buy area. The market is still can bounce off that level, but if we look at the 1 hour, this market less likely to be directly bullish without breaking this trend line. If it does, then we might see that it may not trend very strongly. It might go here and then come back, so it's not gonna be big move potentially if it doesn't take enough liquidity from this trend line. And if we look at the calendar, I'm looking at here, so today the cash rate on AUD was fixed, constant. There wasn't any change, so that we can see from RBI statement by Monetary Policy Board, Monetary Policy Decision. At its meeting today, the board decided to leave the cash rate unchanged. 6. So that we can see that on AUD. Okay. This is in an uptrend now, and DXY, that you can see there was a previous daily candle was bullish move back up, and now the market is on a sideways. So there is a liquidity sweep here that we can see back to back 2 long week, and now the price is on DXY rejecting back below. If that's this market slowly breaking below, gold might slowly breaking to the upside. So we can understand the gold move from DXY. Okay, so therefore the current support level is here, and it's more often you'll see that the market react to the DXY, rate cut, all of that in gold in the same way. So basically also that's a part of the fundamental analysis. If you are looking at, because these news are essential to predict the market. Some clues that we can use FOMC. Now, according to the data that we can see in the past information, the Fed is likely to cut rates for a 3rd time this year. Okay, so if the rate cut is coming, then there is coming also the drop on dollar, right? And that's gonna be bullish on gold. So if you look at the gold here is, and we can see that the market is in fact potentially preparing for that kind of news. Because if you look, today's Tuesday, see the calendar here to see again. So 11th of sometime, because of the timing it becomes a little confusing, like Wednesday, Thursday. That's it's create a very interesting. I get confused sometimes. Is the timing like so Wednesday is the, so today is Tuesday, after 12 it's gonna be Wednesday, tomorrow after 12 it's gonna be Thursday. So tomorrow is where FOMC, right? Now if tomorrow FOMC, then if tomorrow FOMC, then today the market, if you look at the price action, and the price action is in fact reflecting that pattern that you can see, right? So you see there is a clear representation of the market sentiment changing. Okay. So looking at this weekly price action here, this is the weekly support, and from this weekly support the possibility here to go back to the weekly resistance. And that's the level that you want to see potentially to have a retest. Slowly it's breaking from that zone that you can see. So the market is slowly breaking that support here that you can see. Okay, and with this break of this support, that's where we are looking at this market to, and if this current low at 4201 is been breaking below, that means it's gonna be in a two confluence that we can look at here for potential rejection, and once we see the rejection we can look at buy entry, because it's already has shown a rejection, so we are not looking to sell at the moment. But this level, this is the recent swing low, that means 4201 or 4200, and that support, once it managed to break below, there are an important confluence that we can look at for us to see that this is an important area of value, because any area of value will be determined how important it is based on confluences. The more confluences, the better. So one important area of value, that one important confluence is that it is having series of higher low. So once the market break that low, it's gonna have bullish bias. Secondly, it is a psychological level. Okay, so if you look at that, is a psychological. So because it's 4200 and that can trigger higher liquidity. So this is the recent, the lowest point, 4200.54, 4201.05. That is another important level. Now, I sometimes receive very important and reasonable question that, okay, if we buy from here, the price is here, then why you are not selling? Can you get this to that point? Let's say the price is here, we are planning to buy from here. If we think that the price will come here, the price is here, we are waiting to buy, then why we are not selling? Right? That's a valid question, but why we are not selling, right? What's your thought on that? You have an idea of this? Yes, good question. Yeah. I guess because the market looks bullish and you want to look for longs. Yeah, so this is what we are waiting, right? For the market to come down and then to give us bullish entry. But sometime I got a question that, let's say the price is here, we are waiting for the market to come here to go for buy, then why we are not selling from that to this level? So the answer is that if the market is here and you are looking for buy here, firstly it's not guaranteed that the market will drop here. We are waiting for the market to drop here. The market is still can go from here to the upside. If it breaks to the upside, yeah, good job. Yeah, that's what one thing. Secondly is we are waiting to buy from here because the trend is up, so that we can trade with the trend. If we sell here, then if the market doesn't drop here and still start to go up, there is a very higher chance to happen as well, because it is a bullish market. And if it goes up, then the trade will go the other direction. And we are trading against the major trend. So trading with the direction of the trend is very important. So you need to look at that, which way the direction of the trend, and then trading based on that. Now here is the market is in a downtrend. We are looking at locally for the market to drop here, but the major trend is daily. Though we see that there was quite a few days market created a long week, but we see that from this support on the lower time frame, there is a breakout and there is a series of higher low. So to look for buys, we want to enter from an important area of value, so that we have a higher chance of the market to again move to the major direction. Trade with the trend, yes. Trading with the trend is the most important, like understanding the trend is the first step. Okay, because once you can understand the market structure, you see how the market structure is building, because market structure is the backbone of the market. If you understand the market structure, you understand trading. So basically you don't have to much worry about being too many times right. Rather, you can learn the risk management and then trade always in the direction of the trend, because the market will never give you perfect entry. It's the first thing. Going gold, I'm sleepy. It's fun trading. So there will be volume, okay? That is the difference between, that those who can stick to. The more patient you are, can stick to your trading plan, the higher your chance of being successful as a trader. Because our trading plan here, okay, this is called the trading plan. So you know that what's your criteria to entry to a trade. So this is your trading plan, that the market to come here to buy, or it shows stronger trend breaking out of this range, and that's a trading plan. Because trading from range, it will just go up and down. Okay. Now it feels sometimes boring, but trading is boring, and that's where it brings more value, right? Because if you can enjoy that boring trading, that's you start to see a better growth as a trader. And you don't find a high volatile session always for entry. Now we are going towards that. So looking at the session again, so the open market is Frankfurt 1:07 p.m, London 12:07 p.m, close market New York 7 a.m, so which is coming later. And the volume start will come just before the sessions open. What is the most volatile instrument currently to trade in Forex? Can you have an idea? Ask the question. Now, volatility has it's a two-edged thing, okay? Sometimes volatility can give you advantage, but too much volatility can cause also confusion, and it might be even difficult to manage risk. So standard volatility is where the best trade setup comes. Coming down here slowly. Now once the market, we are nearing to our zone here that we are looking at. So 1 hour candle close, and it's coming down here. Create a big head and shoulder as well. So there is a drop, and it's potentially breaking that low. Ready for an entry. Now this is 15 minutes price action. This is the 15 minutes support. There was a bounce and drop back below. Here okay, has broken back below here. So you're discussing. We might be opening buy market. So let's see that 4-hour section, double checking the multiple time frame, because we want to see the market really getting a rejection before we get an entry. We don't want to enter on a reversal, though it can happen. The market can do, either way. It can create this is a false breakdown and can still drop because there is a smooth trend line. So confirmation very important before we look at that entry. So I'm looking at the multiple time frame. It has broken this swing low here. This is the trend line. And this is the psychological level. There is another trend line at the top. We'll be using pending order for any move here back above. And I want to take the most obvious move possible in this market. So we'll be using a buy stop order for a potential move in this market back to the upside. So it's gonna be a buy stop order. That means pending order, not market order. Placing at 4202.42. So it passed just the entry point. So I place the pending order here and waiting for the market to trigger back above. Now this market can be if this price breaks this support, there is a big fair value gap and it is still can come back down, and that's why I'm not buying from that low yet. And at the same time it can retest this low and then bounce off that level as well. So it's getting some reaction from this level and could continue to rise up, and we might see the market to potentially break that high, and that's what we are looking at to see. But I do not want to enter by market here because we want to see the market manage to break that high. So it's a buy stop order that we placed. And in this live chat, guys, I would like to see that how many members are currently placed that order. Can you write something in the live chat if you place this order? Thank you. Okay, so here we see the price slowly. This is a key support level that you can see, and changing the season. Do you think if the market close above the key level, it will continue going high? Okay, one thing, there is only one thing that I found valuable is, if you guys look at, is that to see the false breakdown or breakout. If the candle close above the key level, more often you see the market creates that false breakout and return back. Let me show you something. So if you see that, let's say market did that, okay, something like that, right? So this what you see here is whenever the market coming to that bounce off that level, okay, when you see this market dropped again like that, okay, and then created this, that's the move that we need to take like that. So if you look at, this is a key level, that's a key level, right? So you can see the market in the past bounced off that level many times. The market dropped back below to the key level, even the candle closed, but just to see that it created a double bottom, bounce off that level. So okay, probably, yeah, my trade is active, I'm on the trade, so let's manage the trade, and then we'll be again discussing about that key level and the important trading technical aspect. Okay, so here is the market managed to break above here, and just cross that high. So once the market here managed to cross 4206, we will be taking partial and then moving the stop loss at entry if it breaks this high above here. You're running few people up here and want to see the market to potentially go ahead, cross this high. It's getting rejection. So we will see that volume coming in let's say around 15 to 20 minutes time, and that's where expecting it to break to the upside as the market has broken that support. Now if you look at our plan in this market, okay, so this is what I was talking about, the trade your plan your trade is very important. Even if you have a trade not going in your favor, but because if you plan the trade, then you know that actually why you are entering, and you can get the feedback and then repeat that over and over again. So here this is where our trend line, and waiting for that break of this trend line, we have seen that break and we place the pending order now above our trend line, and we keep this as a stop loss, this break below. Now if it is a false break, then we should be able to see the market to reverse back again to the upside here. Now what I was discussing a few minutes ago is that here is the key. So if you look at a market doing like that, this is a key level. You see that more often the market will break below here, will create a reversal pattern here, and then the market boom will continue to trend back up. So this is what important, right? And why it is important is because trading is, if you look at the trading, it's all about the buyers and sellers activities in the market. Thank you. So entered at 4198.88 at the retest of 1 hour breakout structure here, took 50% of the B. Okay, so if you entered at 4198.88, that's a pretty good entry. That's a good entry, but I normally wait for confirmation. Okay, so this the reason I placed the pending order above is because we want to see that the market managed to go back to the range again. Okay, so if you look at this breakdown here, it can still be continuing to trend because there is a fair value gap here, and still there is a possibility for the market to break that. You can see it's getting rejection. So here our main focus is to enter the false breakout. Okay, now there is a candle close on 30 minutes in the price action showing up to be now some rejection from this level, and this market already significantly overextended here in that area, and there is a high possibility for, okay, so you can see the market slowly, whenever coming down, the buyers pushing that market back above, which is a good sign of continuation. Will today's news bringing big moves? Today's news, which is a George Job opening. News may not bring very big move. Today's news, there will be some spike, because this is a red folder news, so any red folder news will have the spike, but definitely tomorrow's news bringing big move. Okay, because it's FOMC, and we might even see that move begins today as well, later in NOI session. So the whole week is this week and the next week. Next week also coming up, ADP non-farm employment change. These 2 weeks are very important to look at, because these 2 weeks where the market really will go. Good time for trading. And then from 20th December till first, till the holiday opening, like opening from the New Year holiday, there might be less volatility. Okay, so because of different region, there is a bank holiday, and the market may not that much of highly volatile. Now here is, after this break again, it bounced off that level. So if we compare the candle printing, the green is bigger, red is smaller and long wick, right? That's how we can read, candlestick pattern. Reading candlestick pattern is very important, because those candlestick pattern has information in it. Bigger full body candles represents bigger volume. Long wick represents rejection. So in these 3 candlestick pattern that you can see, bigger green candles, long wick red candles. So that's where expecting to go ahead and create a new higher high. So for the news, basically, what is the best time for news to trade? Like before news, after news, during the news. It's very important. Do you, before, I saw some people long ago when I don't know, these days people do or no, some people traded in the news. Have you been ever traded that? In the beginning, I opened once, I remember, long ago, and burned out. Then I stopped, because during the news is just the move. You'll see that it's tempting, right? Because there's a sudden move, but just to see that, it's nothing, because there is no volume and the market just fluctuate without, especially at the time of news, like at the time. But after the news, let's say 10, even 5 minutes, 10 minutes later, it becomes a very good market to trade. Not instantly at the time of data when there's a spike. Trading that spike is very difficult. Okay, so here is trying to break below. getting the reaction back above. So whenever coming down, the buyers are putting the pressure here. It's suddenly the volume dropped, and in few minutes, hey everyone, welcome. Welcome guys. And how many minutes? So there is another 5 minutes candle is coming into close, and before this candle close, if we see that long wick rejection here can be sign of further bullish. Okay, so we are going towards the NY opening, right? And here is, see the volume coming. Great. Now, as soon as the market will, just my plan here is that as soon as the market will be crossing 4206, okay, as NY opening coming, if it spike up, we might see that crossing 4206. So if the market cross that 4206, I'll be taking half of the position out of the market, that means half profit, and we'll move the stop loss at entry. So this is my entry here, about 0.99 lot, and I will be going out with 0.4, like nearly 2.5 lot, and I will keep the stop loss. I'll move this stop loss at entry to make the trade risk free. So because I'm telling it early is because the market might go very fast and there might be few seconds of delay of this live session. So it's my plan here is that as soon as the market will cross this level 4206, nearly there, and I will be taking 0.5 lot profit and the other 0.5 lot. I will move the stop loss at entry, keep running the rest for further to the upside. Potentially if it breaks below, we might be going the other half off, but that will give us more like flexibility for if the market goes up further, we take more on that. Now at the moment we are running with this little up here. By the way, welcome to the live session, traders. If you're enjoying the live session, make sure you give a thumbs up, and also subscribe to the channel if you haven't done yet. Press notification bell so you are not missing any of the content that I am posting every day. Why it's not showing stop loss and entry here, I don't know what is showing here. So you're running 25 pip profit, and 25 pip profit running here. It just crossed that to 4205. Now at this point I'm taking that half profit and will move my stop loss at entry. So I'm moving the stop loss at entry and it's taken the half profit. So I have updated the group as well in the premium. If you are following in the premium group, you can check the notification. Better always to keep up to date. So I have taken the half and okay, it reached that level. Okay, it's keep pushing high. So this is my half. I didn't buy very big lot, so I bought only 0.99 lot, and that's basically based on the risk management. And so as you guys can see, this is the entry that we entered at 4202.42, and stop loss we placed in the, and I took the half at 4205.05. The other half is running. So let's see that if we can take the full up to the TP. Right, so I have also shared the trade entry to the premium. And by the way, you can join also the free Telegram group where there is more education every day. Do you take pairs partials? Okay. Do you any good video on how to do that? Thank you. I'll be explaining now. It's simple. Okay. Okay, it's simple, guys. So taking partial, if you see that it's mine running at the moment, so close 0.5, the other 0.49 is running. If it drops down here, we might be get out, but if it goes up, so if you are using on desktop, so what you can do, you just click here with this lot volume number, and that many that the amount of lot that you want to close, just change this number to that. For example, I can write here 0.25 if I want to take another half, and then just click close. Okay, so if you close here, then it's gonna take out 0.25 lot from the running. I didn't do that because I'm not closing it. And if you are using mobile, the same way, just you can click that button. I think it's at 2271. So if you are using mobile, that just press on the running trade. Okay, press on the running trade, and once you press on the running trade, click close or modify. I think it's close. Okay, click close. So once you click close, you're gonna see close with profit or loss, whatever. It's gonna come with close with, and you see that in the middle there is a lot that will show you how many lot running. You can change that lot. So I can do quickly a screen recording here, and then once you see that lot, you can just change the number, that amount you want to close, and that will be enough. Does that clarify? Okay, so the market moves above, which is good. So what I'm going to do here, guys, is as soon as this candle close, I will move my stop loss here. So it's gonna secure another 25 pip. If it drops down, I will be out here. Okay, so I'm moving my stop loss now at 4204.78. That will be another so I move my stop loss at 4204. So mine at 67. Might get out. Still on it. Okay, I've been out here. Because it dropped again, so I don't want to run it anymore. I'm out here. Welcome. Okay, so as we planned, the market has done that. Now it may still remain bullish, or it may come down for a deeper pullback, but it's a bull market, right? So we'll be re-entering if it comes down to an area of value, but patience is important here at the moment, because that's where the bigger reward will come when you're patient. Now let's review the market again to see that what is next coming up. Okay, so this is what I always do, that looking at market from a, after opening any trade, it is always a good idea is to look at the market again, like as a fresh perspective, because the market changes very frequently. The reason we trade on lower time frame, because if you trade, let's say, on a higher time frame, on 4 hour, just delete those levels here, and we'll be discussing also the logic behind the trade, which is, I think, very important part. Now if you're trading on 4 hour, we saw that there was a big 4 hour candle close, and then the next one is very small range, right? In a couple of hours it's moving in this range, so the market is recognizable. Let's say in a lunchtime you have seen like that, even in a near the dinner time you see the candle is there, so there isn't much move in the market. But trading on 1 minute, in just like if you go to drink a coffee or tea and come back, and you see the market sentiment changes completely from the bear market to a bull market, or bull market to a bear market. So that's why when we trade on lower time frame, it is always a good idea is to refresh the chart and then look at again what kind of new market structure has formed. So we could enter here. I think one of you who said that bought at 4198. Okay, that was a 4198. Can you let us know what strategy you use? Like, why did you enter here? I always remain curious. 4198. .88. Okay. Usually if I'm trading here, for example, the reason I wouldn't enter, it's okay if you have a different strategy, that's fine. If you're confident, sometimes I like do enter thinking that the market will go up, but I normally always wait for after the break of structure then to revert back. So if you looked at this live session, especially in the beginning, this is what we planned, right? If you look at the trading plan that we made starting of this session, what did we discuss is that series of higher low, and we want to see the market break that series of higher low, and then we will be looking at entry. The market has broken that series of higher low and the price dropped down, but the thing happened is that it has broken again. So that breakdown can be a downtrend as well, right? Because the market can be in a downtrend, can be. So the reason I place the stop the pending order above this swing high is once the market breaks this high, that means it bounces back to the range again. So this break below that we have seen here, it is a false breakdown. Look, it's a false breakdown. And when the market creates the false breakdown or false breakout, that is a possibility of a bigger move in the market. So now it's still maintaining now an uptrending market structure here, and I'm looking for the next setup. Are you guys, what's your now prediction here? You can share your thought. Let me start with a pool. If we do a pool, I think it's still remaining bullish, but what's your thought? You can share in a poll. I'm posting a poll. Very difficult to count exactly the pips because it's very tight move. Now here we can see the market has tested the low again, and there's another false breakdown here. So the market from here, there is a breakout here. There's a bounce from this support level that you can see on gold, and with this breakout now it may continue to trend. Now what kind of, as we discussed in few minutes ago about the ATR and other price action confirmation that we have seen in the previously discussed, this is what the ATR is so important here. If you look at, and if you look at from here, there is a one move straight drop back passing that point and the bounce off that level. So basically to find a key level, okay, and then to see that the market has penetrated that key level with a bigger ATR, with a bigger rejection from that key level, that's where the better trading opportunity that comes in play. Now the market, we can see that after this bounce, that means from this series of higher low, broken back below, managed to break above. Now it's still maintaining that uptrend, so that might take the price back above to this key level, that means 4212, or even possibly to break above. So if we want to re-enter again for another entry, we want to see that the market is in a very significant key level and then started to trend, because here this price can have a breakout again depending on the volume, can come back down again to break this support. But this support is very crucial because this is where the double bottom, and we saw the market breakout. We have entered here our trade and then created this move, then sideways. But if the market coming to the price lower this level, that means if the market lower 4201 again, and then see bigger rate here with a bigger rate here, and then we can look for pending order again. We want to use pending order especially in this kind of situation. So it's showing that bearish pressure. So I do look at the multiple time frame because that is where there is a higher possibility. Now looking at calendar again, see this is breaking out. So smart money bought from this level. So the market has made its move. This is an order block. So this doji here is liquidity zone. The market tested that support, managed to break out. That's a very big doji. And it could remain still bullish. Cast a vote to see what gold in NY session. We see that 62% pool shows 62% bullish, and it might be that, if you look at the weekly, still at those levels again to see the fresh move in the market. So this is the weekly market structure, reanalyzing. Weekly open with a gap. So there is a gap open. And with this gap open, there's a series of higher low. And because the market made that series of higher low, expecting that this market to potentially cross that high to create a new higher high. Daily chart, there's a daily bullish engulfer that you can see the market tested the daily 10 EM and created this upside. So now if we look at the whole chart again from the daily time frame, and we are looking at, if we add some fundamental confluence, what might comes with the FOMC. If there is a rate cut on dollar, that's gonna drive gold back to the upside. Okay, there is a possibility that I wouldn't say that it's gonna happen right now and we're ready to buy, because we already bought, and now the bias coming here is therefore bullish because there is a potential for rate cut. And quite a few long wick that you can see in this area, and that long wick might be showing up that this market to trend again back to the upside here. And there is also significant imbalance in the market. This is an imbalance that you can see here. Okay, so this is an imbalance, and that imbalance could be filling that here to go ahead. So I'm looking at now 1 hour. This is support, and you see quite a few long week candle being formed. There's another one. So whenever the market is coming here, there's a buying pressure, and that might take that market back above here to create a new higher high in this market. So the market slowly breaking that support here, and it's still bullish, but if this is the plan, the market breaking that low can be another buying opportunity. Today's market is bullish, so I'm only looking at bullish trade setup for this market today. And the next entry point could be after break of this low, not directly. You want to see in the same way the market created in another breakout from here. So I'm almost ending of this session. We do sometime extend a little bit. Today I'm happy with what traded so far and want to see that later with the London session close can come some new volume, and I'm also going to trade during that time period. Also, you'll see that during that Charles job opening, so keep up guys during that time period if there is any trade. And tomorrow we'll be trading this whole session for few more trade coming. Employment cost index, this is the news that tomorrow coming up, right? So, and then FOMC, okay, at the end of the NOI session. Big day coming for tomorrow, and get ready to trade it, guys and girls. Thanks for joining here in this live session. Trade safe always, and again tomorrow coming in the same time, so you can press that notification bell. Also stay connected by joining the Telegram. You can find link below for all the updates, and I do share some of my ideas there. Have a good time, and we'll see you again very soon trading live.